Well, good evening, everybody. Thanks for joining me this afternoon or this evening, depending on where you are located around the world. What I'd like to do for you in this video is just go back and recap some of the shares which we've spoken about in three particular watch lists which we've created and we've been tracking and following and trading for the past 3 weeks now. So what we'll do is we'll simply start at the top of these lists. There's three lists to get through, and we'll just speak about some trades which we've placed, some trades which have worked out, some trades which haven't. We'll just come to some form of conclusion what the market is going to do and what it tends to be doing as well at the current juncture. So what we'll do, we'll start with Berkshire Hathaway. These are Class B shares, so they are priced a lot much more cheaper anyway than obviously the Class A shares. Here we had a really nice entry at 119 just to catch the breakout of what we call a consolidation period, and this trade worked out very, very well for many of our students here at Pivot Point Trading. We had a target up here at 123.76. We hit that 3 trading sessions later, and really since then we're just sort of retracing back into those exponential moving averages until we get the next pop higher. So I mean, for the next few weeks or definitely this week anyway, BRK or Berkshire Hathaway Class B shares are definitely off the table. We're just going to wait for these exponentials to catch up and then try and leg into the next bullish move higher. So that was a really fantastic type of share to bring us into this market update, into this individual share analysis update. Dallas, you can see the 2 triggers set up. Nothing is triggered as yet, so I don't really want to spend too much time with that. Ford Motor Company, 2 bidirectional triggers as well. Very excited about this 1496 if in fact we do roll over. We have a series of lower highs setting up on Ford, and as you can see, we may, get a rejection at that 50 exponential moving averages. If I switch to the oscillating indicators, you can see that both the stochastics and the RSI are supporting the next move down, and the MACD is really sort of plateauing around that signal line. So it's saying that the momentum with Ford is definitely coming to a halt, and it's waiting for a new move either higher or lower. So that's Ford, a very nice bearish setup on Ford. Goodyear tires, I mean, I don't know why there's no trigger set up on this, but really the bullish trigger needs to be placed up above resistance, which is up here, really about $29.19. So not too excited about GT, or not for a little while longer anyway, until we come up to this pivot point at the top, and then we'll make our clear trading decision as to whether it wants to break out or to simply roll over. Hewlett Packard was an exception, exceptional trade today. 2 bidirectional triggers set up, 30.85 and 28.54. A nice little breakout here. It's a very, very quick move up to our next resistance level, which is here at $32. So a quick $1.15 move. But our second trigger, or second target's up here, just below $35 or just above $34, which makes that risk reward really enticing entering into this HPQ trade. So that triggered today, of course, being at during Wednesday's trading session. So that's another really nice share which has happened to work out in our favor this week. LVS, again, not a whole lot to talk about. We have broken out above resistance, and we could be simply touching this and retesting this as new support. So what I'm going to simply do is set up a bullish trigger above $84.99. I'm going to put in a bearish trigger down here about $80.06 a share. Whether it wants to break out and break down, again, we're at a very important pivot point at an all-time high on LVS, and usually what happens at this pivot point after you break out and sort of retest that old resistance as new support is that you get an influx of buying pressure, which is going to move the price of the share up. So quite interesting. Again, we're sitting on that 10, we're sitting on that 20, we're sitting on that 50. So all of these are indicating that the bullish trend is going to continue. So this $84.99 trigger is a very, very nice setup on Las Vegas Sands. NSC, again, another nice trade we had set up. This is from 2 weeks ago with a 94.76 entry. We did get a little breakout, we did get a little pullback into the 10 and the 20, and now as you can see, it's simply starting to break out and starting to trend higher, which is really, really good. A bit of volume came into NSC today, and we're currently trading at $97.30. Nice little move on some call options which we have on NSC. So in the way of a target, you really want to do what we call a fib expansion, so we can simply just take the range more or less of this move here, then project it into the future. And as you can see, we've got our targets here, $98.31, $100, and also just shy of $105 a share. So I'll be keeping an eye on NSC just to see how it moves over the next 3 trading sessions, or at least 2 trading sessions, as we close out this trading week in March. Here we go, Oracle again. Bidirectional trade setup. You know the key and why we trade bidirectionally. Bearish trigger at $37.34 and a bullish trigger for the breakout around $40.12. There was an earnings announcement, let me just bring this up, yesterday. So we did get an initial gap down today, but it was in and of itself pretty bullish candlestick. What I like about this is that we didn't gap, so we didn't get a huge gap down and we didn't get a big bullish gap higher. We just simply traded sideways. So again, this gives us a really nice range. It is pretty neutral sitting out here at these highs. So I do like these two triggers at $40.12 and $37.34. So that's the basic trade setup on Oracle. What we'll do, we'll finish with TJX. Now TJX, let me have a look at this one. Again, at a resistance level, which is very, very important, we are getting some very nice bearish reversal candlesticks. Let me just have a look at our 50-day or our exponential moving averages. And as you can see, we're sitting right on that 50. That's why the trigger's down here at 59.78. Let me consult with the simples. And again, we've got this 59.78 below that 100 simple moving average. So we want to make sure that price actually wants to move lower before we start getting ourselves into put contracts, or at least selling short the individual stock. If you consult with our oscillators, you can see again, they're all in agreement. So they all want the share to move lower. And it's telling us that momentum is definitely to the downside. So that's quite interesting as well. So TJX is set up for a bearish move. We're just waiting on price to obviously confirm. So that's a really nice intro. Let me just have a look at another watch list which we have here. This is a few technology stocks by the looks. So we've got eBay again, very neutral, just hanging out here. I wouldn't be surprised for it to do this for the next week. Facebook again, moving sideways. It isn't a bullish trend, so watch that 50. All I can really say is buy the breakout above $73.15. Now Gilead or Gilead Sciences, again, a nice little bear flag setting up, or what appears to be a bear flag. That's why we have this trade set up down here at $74.29 a share. I'm not getting carried away on it until it breaks above those old highs. For the most part, we might be setting up a little bit of a sideways channel here. Other than that, there's not really a lot to add to that picture. We did break what we call a trend line, which is quite interesting. So if we do come up and rally, watch for this old trend line to act as resistance. A very, very good opportunity to start shorting from old broken trend lines. IRM, you can see this one bracket traded as well. Not too excited about it. Let me have a look at the Bollinger Bands, and they're not even sort of constricting price yet. So it really isn't a share to have on your watch list at the moment. MA, again, this is a very nice trade setup. You may or may not be triggered into this trade. If you are, it would have been because of this upper wick right here. For the most part, it does look to be sort of breaking out. You can see we are in between support and resistance lines right here. You can see how price has been battling those exponentials. You can see what appears to be almost a breakout on MA. Very, very interesting. We are also bouncing off that 100 simple moving average. The ADX is turned up, saying that it likes this little bullish pop here. We'll see what happens. CCI doesn't really like it. It's pretty neutral, to be completely honest. And again, the oscillators aren't really giving too much away either. If anything, they're neutral to bearish. Let me have a look at this Bollinger Band squeeze. And as you can see, that's why we have this order positioned at 79.75 cents. So in the event that MA breaks out, we're looking at targets just above $84 a share, which gives us approximately $4.25 of bullish move up until our target, which is really, really nice. MU, again, in a nice Bollinger Band squeeze almost. Really, the downside's limited because of all of these support levels down here. So I'm not getting too carried away. I do think this will trend and break out above $26.13. So MU, I'd say to just sort of buy your time on it. You can see how strong that trend is, and we are just sitting on that 50 exponential moving average. So there isn't really too much to take away from this other than to just wait and wait for that bullish trade setup to come to fruition and tend to break out, or wait for it to break out. Tesla Motors. Again, what we thought was happening was we were getting into some form of pennant or a little bit of a descending triangle. Not really what we call a descending triangle. These things set up over the period of about 2 months. So this is much shorter term consolidation. We are simply retracing into those exponentials again. So we've got that continuation bullish trigger at about $250 a share. Twitter. I don't want to spend too much time on Twitter. Not a lot of market data to work with, and it is quite choppy. So it's more sort of a day trading setup, not so much a swing trading setup. Yahoo, again, we had this bearish trigger set up at the beginning of the week, about $36.21. Monday, Tuesday, and Wednesday's trading sessions have gapped up. But today on Wednesday, of course, we had that really nice bearish engulfing. So I still really like this 36.21 trade. No, we weren't triggered into it, but we were very, very close. That's why we use contingent orders. And again, if it wants to move higher, so be it. 41.88 is the price point which we're looking at. To finish this second of 3 watch list, what we'll do, we'll talk about Zynga. Now Zinger at the moment again is just really following the basic market, and a lot of individual shares which have broken out and sort of moved into trends. What they're doing at the moment is just resting, and they're just moving back into logical areas of buying, where buyers are going to most likely show up and support the price of the share. So short term, Zing is bearish. And to be honest, I don't even like this $4.84 trigger. It's not something that I will be personally placing in my own account. So I'm just going to move it down to about $4.65, just so there's enough room below that 50 to really confirm that it wants to move lower. If anything, this $5.92 entry is very solid. It's a very good entry, but to be realistic with yourself, it's obviously not going to trigger this week. So you can sort of forget about Zinger for the week ahead. I will keep you updated on Zinger when, of course, the time warrants it. So what I'm going to do now is finish with our last watch list here. I think we have 15 simples down the bottom. Then we'll call it a day. So what we've got Target, TGT. I mean, let me just have a look at this. It appears to have a double bottom here and a nice bullish gap. You can see that open window. Let me just change back to the first template. You can see this open window right here. Now, this is all going to act as support. So, I mean, again, if you wanted to enter on the breakdown of these lows, you've got all these support levels down here. So it's not really a share which you want to be shorting at the moment. We are sitting on the 10, the 20, and the 50. What is most likely going to happen is that we're just going to get into some choppy range around here. We could come down to support, pardon me, and then bounce. It's just going to be quite ugly. So until we break above 63.25, or at least let me bring this down a little bit here, down to 61.76, it's not something which is too exciting about. You can see the simples again. They're telling us that we've got that bearish cross, price below both. We're in a bearish trend, and if anything, we're getting rejected at that 100. So Target isn't looking too healthy at the moment. Let's talk about Soda. Soda, you can see the two triggers here, quite a ways away. I do think, again, we're going to move into a continued sideways move, and that is exactly what I expect, pardon me, for Target as well. So there's not a lot of trading opportunity with those two. SEE looks good if we can break 31.56. Be aware we are trading into a trend line. So if anything, I'd be bringing my bullish trigger down to about $33.03. Just to catch a bounce if in fact it does occur. What I'll do with this bearish trigger is move it down to about $31.11. So just so that we get below support, get below that bullish trend line, and that'll really sort of collapse price in a very sudden move lower. So that's an updated trade on SEE. It looks very, very good, very, very healthy. SCTY. Not a whole lot to talk about here either. We caught that little breakout to resistance. We reset the trade up at 90.18. Didn't trigger. Pulled back, broke through the primary trend line. Now we're just playing with fan lines. So if you want to learn what fan lines are, come through the axioms of stocks and options. Again, these two triggers are really solid. I'm going to move this one down below support and below that 100. So this is quite a way away as well, but it's definitely a very high probability trade in the event that price triggers. Now, Pepsi. This one I'm quite excited about. You can see that obviously we are in a bit of a trading range. You can see the basic channel setup on Pepsi. And at the moment anyway, we're sitting right on that on that 100 and 200 simple moving average. If anything, we're starting to get rejected. So if we get rejected, we want to enter at about $80.50 according to this template. Let me bring up the exponentials and show you why it's $80.50. It's also below the 10, the 20, and the 50. So again, although things look bearish and it appears to be rolling over, if I consult with those oscillators, you can see the stochastics, the RSI, and the MACD are all starting to give us bearish crosses. As swing trades, we really need price to confirm, and really those last support levels are definitely that 100, that 200, and definitely that 10, that 20, and the 50. So that $80.50 bearish entry is a very, very solid entry. Other than that, $83.53 on the bullish side, trading up to about $85.40 bullishly. Oracle, I think I've addressed in a previous video. We spoke about the earnings gap, so I'm not going to spend too much time on that. LinkedIn, unfortunately, is a losing trade for us at the moment. We had a 196.90 entry on it, and as you can see, we had a really nice bearish candlestick, but then on Thursday's trading session, we had what we call a tweezer bottom. It's pretty much where you get the exact opposite candlestick, a long day, much like over here. And it sort of reverses the move. Now, today's session was a spinning top, which isn't too bullish, and the market isn't looking too healthy either. So, I mean, depending on where you place your stop, I'm simply going to place mine above the wick of this shooting star candlestick right here. It could still work out to be a very good trade. This could simply be retesting old support as new resistance before that selling pressure comes back in to LinkedIn. what's this one? LLY, Eli Lilly and Company. I have no idea what the share is, but I know how to technically trade it. Nice little Bollinger Band squeeze, 60.55 on the bullish side. The reason why the trigger is so low here is because we have that open window. You can see that open window right there. And also if I switch to the exponentials, you can see that we're trending. So we're making a series of higher highs and higher lows. So you don't want to be shorting into the face of a bullish move. It's very, very risky and it's very silly, and you can lose a lot of money doing that. So this is strategically positioned below the gap support, below the 50, at about $55.16. Obviously that's not going to trigger this week, so the real potential for trade is above 60.55. So move on. Here we have Garmin again breaking out above resistance levels. Nice open window gaps. As you can see here, we did have a bearish trigger at 48.31. Did not trigger, which is fantastic. And we've got the bullish trigger here at 55.71, giving it a little bit of fluff to break out because this market isn't too convincing bullishly at the moment. So have given this trade a little bit of extra fluff on the bullish contingent order. Other than that, it looks very healthy. We've got continuation gaps, which really signifies that the move is halfway complete. So if you can measure this from about $32 up to 50, we'll call it about a $28, an $18 move. Really the next target above 50 is looking up about the $68 level. So we're at 54, so we do have quite a nice move left on GRMN, which is really, really good. FSLR, check this one out today. It absolutely rocketed. Very interesting. Bidirectional trade setup. 59.60 bullish, 52.14 bearish. Woke up this morning with a huge shock, absolutely huge shock. Call options were on the table, contingent order was open. And then from 59.60 up to 69.40, you've built almost $10 of intrinsic value into that original position for really no real reason. Obviously, this is news driven. I have no idea what the news story was, or fundamentally driven for that matter. It doesn't really affect us as technical traders, but you can see the benefits of anyway setting up contingent orders when the market's closed and then having absolutely no emotion during the trading day. It's a very, very good way to trade. DE, similar to Pepsi, in the fact that we're set up for it to roll over. Here at 86.22, targets are down here, about $84 a share. CSIQ, again, bouncing off support. This could be a little what we call a bear flag. We've got the continuation trigger down here at $31.12. CNX, not a whole lot. This is looking quite bullish though. Really nice sort of stair-step pattern taking place. Coming up into that resistance level, 41.54 on the bullish side. Looks very, very good. CHK, this is almost definitely going to break down tomorrow. You can see these two bearish candlesticks engulfing, Tuesday's candle. I mean, this has got bear move written all over it, but it's really small though. It's only down to $23.90. So it's, you put that into perspective, it's 70 cents, which is still a decent move. And it is a high probability trade setup. This is obviously starting to roll over. You can see the lower highs. And if I consult with these oscillators, you can see just the nature of which, or the direction anyway, of which way the share wants to move. So that will round out this market update and individual trade analysis. Thank you so much for watching. If you want to learn how to do this for yourself, have a look at our website. It's pivotpoint-trading.com. Sign up for a scholarship and learn how to do this analysis for yourself. All the best, everyone. Goodbye.